flows of capital, aka money finding a home, is extremely important because there is a direct correlation between flows and returns. So if we take a look at, and this is just Canadian ETFs. Okay, so this is just Canadian investors piling into either one of two choices: international, MSCI EFA, or US, S&P 500. And what we can see is these figures are in billions as to what has flowed in. Yeah. And because this is just Canada, obviously they're still big figures as I'll go down here. Yeah. But this is the same story consistently across the world. Over the course from 2016 to essentially May of 2025, there has been a total injection into international securities of $185 billion in the Canadian landscape. The US is at $499 billion. A difference of $314 billion more in US equities. For every dollar that flows into international markets, 2.7 goes into the US. Relentless flow of capital. And is it no wonder, and this is why I say where money flows, returns tend to follow, is if you look back at this chart and it shows you the performance of international markets versus the S&P 500 and the difference, I've went back even further and said over the last 15 years, and this is why people continue to pile into, over the last 15 years from 2010 to 2024, U.S. markets have outperformed international markets 12 out of 15 calendar years. Mm-hmm. There's only been 3 instances where international markets have outperformed. But is it any wonder with the relentless flow of capital as to why this is happening?